Welcome everybody guys. In today's video we will take a look at the Great British Pound, because those of you who are following the gold market, you probably could see that the gold market has formed really the most narrow trading week in the last probably few years. So it was absolutely no trading range in the gold, and as a result nothing to say currently on the technical picture in the gold market, because it mostly stands the same. The one thing that we could say is that gold market right now stands under pressure because of some massive relief in different driving factors. So Fed policy stands stable, statistics is improving in the United States. The first stage of the agreement between the United States and China is underway and should be signed in January. So from all sides, gold market right now stands under pressure, except maybe the possible impeachment of Donald Trump, but this factor still stands undercover and it's not clear enough to make the judgment on it, and probably we should get the answer in January. So it means that the two major driving factors could make impact on the gold. This is impeachment and this is signing of the United States and China agreement. So details we should know only in January. That's why currently it's better to take a look at the Great British Pound, because at least compared to the gold market, it provides clear and interesting technical setups. On the Great British Pound, everything stands like in the fog, because once the euphoria of the recent elections and victory of the Boris Johnson now starts to fade, investors begin to think about what will happen on the Brexit. Everybody now is warning about possible difficulties that as European Union or as the United Kingdom will meet once they will turn to the agreement signing, in what atmosphere this divorce will take place, what the problems will arise. So all this stuff now is disturbing investors, and that's pressing on the Great British Pound. We are not smart enough to make the forecasts on what the effect of the Brexit will be on the economy, how it will make impact on relations between the European Union and the United Kingdom. So this will be really square-head person to make the forecast on such events. But one thing that we could say is that probably the situation should become worse before it will become better, just because such events as a Brexit just can't pass quiet and unsigned. Definitely it will be a lot of turmoils around. Situation in the economy should deteriorate probably a bit, because it's long standard relationships. When it's breaking, it's definitely will hurt the economy, as in the European Union, as the United Kingdom. So, and we intend just to follow on the tendency, because the prices right now reflect these worries of the investors, and the price performance shows what is going on now in the minds of the investors, and we try just to follow it. As a result, we have a lot of trading setups that now is forming, as on the high time frames, on the monthly, weekly, as on the daily and intraday charts. So here in the video we will not talk about the longer term setups, so you could read our weekly report. In the shorter term, guys, we intend to trade this significant drop, because here on the daily, on the weekly chart, and even on the monthly, you will see that this in fact the large bearish pattern. So on the weekly chart looks like the huge bearish engulfing. Our suggestion, we're trying to follow the classical approach. So it should be dropped, then it should be some retracement, and then downward continuation. So it means that currently at the first stage, although it stands mostly important for intraday traders, we are watching for signs of the bullish pullback here, some upward retracement, and it could happen from some level. So currently, on Friday, we talked that this theoretically could start in this area, because this is confidence support, daily oversold, and theoretically market should show some pullback right from here. But at the same time, we called, do not act blindly, do not take the long position just because we're at confidence support. Wait for the clear bullish pattern, because this really strong action, strong downside momentum, and it could be dangerous. Take the position against it just because market at the support. we have to take the position, I mean long position, only when we will have clear bullish reversal pattern on the intraday charts. Currently, we do not have it yet. And as we do not have it yet, we could try to take a look at some levels, some support, some extensions that theoretically could become the ones where these patterns could start to form. So based on the daily chart, it seems that ultimately market could drop as long as to the 127.60 area, because this is bottom of this consolidation, and theoretically we could suggest something that could look like the hand and shoulders here. But this is ultimate level. I still suppose that probably market still has chance to show this pullback a bit earlier. So currently, as you can see, market is dealing with our confidence support, but the price already stands slightly below it. Next level stands in 29.90, and I think that will be most probable area where a pullback could start to form, because this is major 30% support, this is daily oversold, and take a look what we have from the 4-hour time frame chart. On the 4-hour time frame chart, as market already has exceeded our XOP, so we do not have any ABCDs extension to the downside, but we could use the extension of the recent upper leg, which is important because this is the rally on the elections. So we use this swing up and build the extension to the downside, and we get 127 extension in the same manner as the butterfly. So we get an extension is 29.23 and agrees mostly with the major support level on the daily chart. So as market has not formed any bullish patterns on Friday, because if you remember, we talked about the possible head and shoulders. We said, well, take a look, maybe market will start to form the head and shoulders, but this scenario has not been realized, has not been completed, because market just continue to move down based on the good statistics from the United States, and this hypothesis on this possible head and shoulders has been destroyed. Now the next level that we'll keep an eye on is 129.20 area approximately, where theoretically we could get this bounce. Well, bounce should be moderate, it should not be too small, because it's strong support on the daily oversold, and besides, take a look, market here has formed bearish reversal swing. Usually after the bearish reversal on any reversal swings, market shows the deep retracements. So that being said, the first stage in our trading plan is to watching for intraday charts and watching for a pullback. If you trade on the daily chart, of course you will not take the long position, because on the daily chart setup is bearish. But you are interested with this pullback, because once it will be over, that will be your signal for taking the short position, because that will be the second trade on this combination that we have. That's for daily traders. Scalp traders, of course, will be watching for bullish patterns and trying to take the long position with the catching this retracement up. On the second stage, once this retracement will be over, we intend to trade it down with some kind of the ABC top pattern, and we suggest that market really could reach 125.50 support area. That's two trades, two setups that we have on the daily chart by far. Once they will be completed, and if they will be completed, we will discuss next steps. But today we talked about them already in our weekly report, so you could read the monthly part of the technical analysis, weekly part of our analysis, to see what we intend to do next.